Hello guys, and welcome to my YouTube channel once again. So in today's video we're going to be looking at a boom 300 index. I know a lot of my fans have been asking me to do more videos on boom and crash. It's one of their favorite pays to trade. All right, so we're going to be looking at boom 300 index, and right now we're on the weekly time frame. All right, so as you can see, the market is bearish. Market is bearish from what we can see here. This is a weekly time frame. Market has been created lower highs and lower lows, but also I think we can just place a trend line here to confirm the market has hit a resistance zone that it would want to actually reverse. Like if we pull something like this, if we draw a line like this, we can see that the market has actually hit a resistance zone on a trend line, and also another zone right here, which is another block. All right, so we are really expecting massive sales from this zone. Expecting massive. We can see the two confluences, the trend line and the other block level here. This is another block here, and while this is a trend line, the market hit, and you see the rejection. Last week rejected this zone and left a very long wick with a little body down here, and the current week has started selling already. So we expect massive sales to the downside. Though this is a weekly time frame, we'll be having some buys and sells. You don't expect it to just keep selling straight up. You'll be having some buys, some little buys, but the overall direction of the market looks very bearish. All right, so as it is, and you can see the way the market, but from here to this place, you can see we have so many we have some bearish candlesticks. This one, this another one here, this another one here. Then we have wicks on the bullish candlesticks that also confirm the market was creating higher highs and higher lows compared to these smooth cells, which is impulsive. So this was a correction actually for the market to continue selling. All right, so this is actually a corrective move. The market would want to continue selling. All right, so after this we have to go down to a lower time frame to actually see where the market would possibly be reacting, because you may not easily identify where the market will be reacting based on this higher time frame. All right, but if you go to a lower time frame, you actually see some smaller zones that are within this movement that the market created during this movement. You'll find some smaller zones the market will be reacting to. All right, so we quickly go down to the daily time frame. Let's go to the daily time frame. All right, so on the daily time frame, you can see what the market actually did. It created a double top here on this zone. You can see the first top right here, and this is the second top right here. Then after this second top, what happened? You can see the market sold. If any of my students saw this, then this would have been a sniper entry, because you'll be entering the trade right from this zone here to take the sales down here. All right, so you can see the market sold and got to this level. This seems to be a neckline. This appears to be a kind of a neckline, though this one here, if you go to like the 4-hourly time frame, might make you feel this is a neckline. This is a strong zone actually to take note of too. So if we try to zoom out a bit, we will see that the market is actually reacting to a zone it has been reacting on previously. All right, this is the zone, so we can easily just place a zone, a rectangle there to mark this zone where the market currently is. All right, so you do this, and let's see how to place it correctly. All right, let's see how to make it better. I think if I zoom in, I would see better. I don't want to make mistakes, because marking out these zones is one of the skills you need to have. Once you're able to mark the zones correctly. All right, now you see this zone. If I want to mark this zone, there's how I can mark this zone to accommodate almost all the points, but you have to consider where you want to take the sales from, because right now what the market is actually doing, let me show you guys something. Now watch, you can see that the market has been selling from this particular spot here. You can see sold here, then it bought here. If you want to extend the zone to really accommodate the tops of this and the bottoms of this, or like the wicks down here, the zone is actually going to be large. So actually you only focus on where the market sold from, because you want to look out for sell opportunities from here. So you try to place your zone to really considering these zones here, because here is where you want to pick the sales from, and not this one right here. Though this one works too, but I want to focus more on here, or I extend the zone to accommodate this wick very nicely, meaning this is what I will be having if I do that. You see, it makes the zone too large on a daily time frame, so I have to decide to actually do this. All right, I decided to do this. Let it be just like this is okay. All right, so then you can see the sales and the buy activity at this around this zone, which makes it a very strong key level in the market. All right, but if I want to look out for buys, I will want to bring down this zone to somewhere here. I want to bring down this zone somewhere here, and if you look at closely, you see market bought from at this way market bought, and this is where market also bought. All right, so that is the thing you need to understand about this zone. Since I'll be looking at for sell opportunities, because I'm expecting sales, I would want to put the zone at this point. All right, now let's also look at this. You can see the impulsive move we talked about, the corrective move, and if we want to place a trend line, we will have something like this. We have something like this, guys. We have something like this. All right. Okay, so then and also remember, this zone I'm talking about must be a zone where if I want to consider this zone to take some sales, it must be that the market has gone below this zone it bought previously. The market has to go below this zone, then close below it, then it pulls back to this zone. This one I will consider it for my entry. I mean this particular zone. So now that the market is still around where it bought previously, I can decide to extend this zone to make it look like this, to be very sure. I don't know if you guys understand what I'm trying to explain here. I don't want to make mistakes, and I don't like making my zones look too large. But for the fact that the market is yet to break below this zone, so I have to extend it down, because you can decide to buy a bit before selling. And if I leave the zone where I placed it initially, I might get confused and feel the market has broken and closed below the zone. For that reason, I might rush to enter a sell trade and the market spikes. All right, so you can leave it at this point for now until the market is able to go below this zone and close below it before you mark out this. You put the zone where I placed it before, then wait for a pullback to that zone. All right, now you can see the corrective move. This is an impulsive move. This is a corrective move. We have a double top here, and the market is at this point. So at this point, we expect massive sales, but the massive sales will be confirmed after the market goes below this low, like I said earlier. So at this point, do not be in a hurry to enter a sell trade. Just be patient. So I want to go down to a 4-hourly time frame to still look at more possibilities of what the market will want to do. So on the 4-hourly time frame, I can see this. All right, so there's a very high chance the market might want to buy first. All right, there's a chance the market might want to buy first. Might want to spike a little before it starts selling. So for that reason, entering a buy trade at this point is not too safe. A sell trade at this point is not really safe. So we want to wait for the market to close below this particular. Just watch the crosshair to see where I'm placing it. The market has to go below this particular level before I'll think of entering for a sell. Else I'll wait, because if the market goes the way if the market remains the way it is for the next 2 hours, or for the current 4-hourly candlestick to close, like let's say it goes a little bit bearish and makes it an engulfing candlestick pattern, you see the market, our bias is going to change temporarily. In that case, we'll be looking for some buys instead of some sells. All right, so for that reason, I want to wait for the 4-hourly candlestick to close. Once it closes, I'll look at what the market has, the way it closed. If it closed and indicates that the market will be selling, then I'll entering at that point. Else I'll want to take some buys, at least from this zone, maybe from this somewhere here up to somewhere here. I'll take some buys up to this level here. Then when the market comes back and closes below this zone, before I'll take some sells. I'll take the main sells. Although if the market gets to this zone, it can start selling from here. But all you have to do is to wait and get the confirmation, just like I'm waiting for this. I'll be waiting for the current 4-hourly candlestick to see what the market will do. All these things you are doing is you are just trying to be careful. You understand? You're trying to be careful because you don't want to jump into a market and up to a trade, and the next thing the market goes a different direction, and you're trading boom and crash. If I enter a sell and immediately market spikes, there's a high chance of losing so much money. Meaning you are trying to trade against the current direction of the market, even on a lower time frame. You understand? All right, so we have to wait. Let me just tell you what's happening on the 1 hourly time frame. Okay, something looks like an impulsive correction in a way. Let's say 15 minutes time frame. All right, so we still have all this, and there's a little zone right here. I'm not sure if the market would want to. If the market breaks this zone, let me not come to this 15 minutes time frame. There's a zone here. If the market breaks above it, it's going to continue buying for a while. But meanwhile, let me leave this zone. Let me leave this time frame to the 4 hourly time frame. I really want to see the confirmation on the 4 hourly time frame, guys, so that I know what to do. So it's very simple, guys. But one thing you must also take note of is this: if you are unable to get an entry here to take some buys, just wait for the market to actually close below this zone, the way I showed you guys. Then once it closes below this zone, trust me, you're going to see some massive sales, and close below this zone, then post back to retest a bit to the zone. Take your trade and know that the market will be selling down to this level here. Let me put a zone there. There's a zone right here which you should be concerned, where the market will want to react. Market is going to react here for some little buys, then it will still come back and go below it, then it will come back. This is another zone you should expect the market to react. So if you can possibly find an opportunity on the for this particular pair, and enter your trade, let's say maybe from this point, and you're able to hold up to this level, you can make up to $600 with just 2.0 lot size, guys. Because I'm expecting some massive move. You understand the continuation strategy, you will know that this is a massive opportunity. This is a massive opportunity. So if you miss the first the entry at this point, if you miss an entry here, try to wait for the market to get the market to pull back and give you another bearish setup. All you're looking out for is a bearish setup. Just look for a bearish setup, then enter the trade. The market is going to sell massively. Like I said, they can start buying again from where it currently is, buy up to this level before selling massively. Just watch out and follow what the market is doing. All right, this is a very simple and straightforward analysis. It's not difficult. All right, if you do this regularly, you will master how to actually analyze the market within a very short period of time, and you have what you want. All right, you can do this for any pair, boom and crash, volatilities, currency pairs, and it works very simple without much stress. All right, all you have to do is just to ensure you understand how to identify your zones, how to identify trends in the market. Like what I did here on the daily, on the weekly time frame, you can see where the trend line cut across. You can see the trend line. See how I drew it. See it touched there. You look at the consolidations here. The market was rejecting this zone. It came back here and rejected again, then broke through it, came back here and rejected again. Now the market is back here again, rejecting, and this is actually another block zone. So you expect the market to sell nicely from this zone down. That's what you expect. The market has to sell from this zone down, and I expect it to go below this level here because the market looks very bearish. All right, so that is very simple, guys. Just keep on practicing this thing, you'll get better at it. Meanwhile, if you want to enroll in my one-on-one mentorship, just click the link in the description of this video. It's going to take you to my Telegram channel. From there you can reach out to me because my direct contact is there on the Telegram channel. All right, then just reach out to me, then we negotiate on how your mentorship or when you're going to start. All right, so meanwhile, stay blessed, and do not forget to subscribe to this channel if you've not done that yet. Like this video, share your thoughts in the comment section. All right, see you guys in my next video. Stay blessed and peace out.